First to our top story this hour, feeling the impact of trade tensions. America's closest allies are now warning they could retaliate if the U.S. moves forward with tariffs of as much as up to 25% on imported vehicles and auto parts. Commerce Secretary Wilbur Ross says it's too early to say if the Trump administration will actually press ahead with tariffs. There's already swift pushback to the move from members of the president's own party on Capitol Hill.
I'd like to see us move to a zero tariff world. The tariff idea is ridiculous. I mean, it's a ridiculous idea. It's going to cost Americans jobs. It's going to tax Americans. It's going to be a tax on the American people. And my sense is that Congress will step in and keep that from happening if he really attempts to do so.
I desperately hope that we get off of this tariff kick. It's really starting to bite around the country. It's just going to escalate. That's the way this goes. You'd be hard-pressed to find any instance where you impose tariffs to try to get a level playing field. It always ratchets up.
The trade impact already being felt here at home. We mentioned it at the top of the hour, where corn is trading at its lowest point in almost a year. And the latest round of tariffs on $200 billion worth of Chinese goods could hit the Apple Watch, Fitbit, Sonos speakers with a 10% tariff. Joining us now, Wall Street Journal Global Economics Editor John Hilsenrath. John, your take on this tariff fight. We heard, because again, we heard in his testimony earlier this week, the head of the Fed, Jay Powell, was very careful to say paltry little about what he sees as the economic impact of the trade fight.
Right, but we also had a Fed report out, the Beige Book, where the Fed goes out and surveys businesses about what's happening out there in the real economy. And the Beige Book laid out a whole bunch of companies that were saying that tariffs were starting to bite them. And, you know, I think it's interesting. Next week, we're getting a report out from the Commerce Department on GDP growth in the second quarter. It's going to be a very strong report, but one of the things that is going to be underneath that report is, again, the tariff impact. We're seeing signs that companies are building up inventories. They're trying to get products in before the prices go up. So one of the drivers of growth in the second quarter was inventory growth as companies prepare for tariffs. And we also saw an upsurge of soybean sales last quarter, which was basically companies getting soybeans out before those tariffs went up. So we're seeing real distortions in the economy already. You know, the numbers are getting big enough that they're starting to bite.
John, with the hearing that we had yesterday, the Commerce Department hearing on the potential for tariffs on imported autos, and I spoke my mind pretty clearly yesterday where I stand on that, on the impact on all automakers, both U.S., which would see higher auto parts, and also foreign automakers that have plants here in the United States, plus the price increases that would be passed on to consumers, running thousands of dollars per vehicle. Yeah. That being said, do you have any sense of where the White House, where the Trump administration stands on really pushing ahead and trying to spuriously use that national security issue to slap auto tariffs on?
Well, I mean, Wilbur Ross said at these hearings yesterday that they hadn't made a decision yet. So, you know, that suggests that maybe their heels aren't sunk in on it. But what we've seen time and time again is there's a lot of disagreement within the White House on how to proceed with this stuff. It all comes down to the president. What does Donald Trump want to do? And, you know, he seems to think that this tariff issue is a winner for him. So, you know, that seems to be where they're going on it. The other thing I'd say about autos is we did a story earlier this week on what's happened in the washing machine industry.
Yeah, you did, because we talked about it. We talked about the Beige Book, which you guys reported so terrifically yesterday, and the prices of washing machines going up.
Yeah, and what we saw there was a 20% increase in just 3 months. So if you think about what that means for cars, if you get a 20% increase on cars, basically a $20,000 car is now going to cost you $24,000. So you know, that's kind of a rough sketch of what this kind of thing could do.
John, it's Kevin Kelly here, but what you were just talking about were durable goods, right? They're not purchased. I mean, people buy those once every 3, 5, 7, 10 years, right? But what my main concern is possibly the perfect storm of where we're seeing rising input costs vis-a-vis rising rates. We also have labor costs. You mentioned the Beige Book. Labor's really tight right now, and then you're talking tariffs. can we hit 4% GDP, or how do you see all these things coming together, the confluence of all these events at once for the second half of this year and the GDP? This administration is still talking about 4%.
Yeah. Well, you know, what's going to happen next week is the Commerce Department will report a GDP number of, you know, the estimates are anywhere from 4 to 5%. Now, what we have to remember is that's just for the second quarter. There's going to be a lot of people saying, look, we hit 4%, you know, mission accomplished. But that's after a 2% number in the first quarter. And then, like you say, the second half of the year is a wild card. A lot of the growth that we got in the second quarter, again, was due to inventory growth. And you could see companies paring back those inventories later in the year. So, you know, I think it does look like economic growth has picked up. Tax cuts are spurring consumer spending. It does look like there's business investment. But I just think it's a little too early to celebrate on this kind of thing. There's a lot of things that have to play out over the course of the year before we declare victory.
Before we move on, John, these tariffs have a long shelf life because we've talked about it on this program. My friends call it the chicken tax, which is that tariff that's on light trucks that we have, 25% tariff on light truck imports. It's called the chicken tax because it was a retaliation by the Lyndon Johnson administration to a fight we had over poultry imports into Europe back in the mid-'60s. So they have a long life.
Well, they have a long life, and that light truck tariff is something that really should be part of this conversation. You know, the U.S. is telling the Europeans that they discriminate against us on cars. Well, we have very high tariffs on their light trucks, and of course, Americans love SUVs. They love light trucks. So, you know, that's a real protection for domestic producers on light trucks.